Organizational behavior, chapter 7. The agenda, we're going to talk about trust, justice, and ethics. Why are some authorities more trusted than others? Trust, justice, and ethics, the summary. How important is trust? Application of social responsibility. So we're looking at an integrative model of organizational behavior from previous chapters. This is the exact same model that we've looked at before. Trust, justice, and ethics. So when we look at this, a firm's reputation is one of its most important prized possessions. Reputation reflects the prominence of a brand in the minds of the public and its perceived quality. It can be easily damaged. So realistically, it doesn't take a whole lot to screw somebody up. A company that can be in business and doing good and have a good reputation can have a few missteps, and all of a sudden their reputation is shot. And people don't perceive them in a way, and their marketplace could change. Even sometimes this has even put some businesses out of business. When you think of these names, look at this list. These are some of the most prominent names that you've heard of. But there's a reason why we hear these names so much. It's not just because that they're popular. It's because they're really good at what they do, and they have really good reputations. Yes, they provide a lot of service, but they have good reputations because there's other organizations who do what some of these companies on this list do, but they're not on this list. So these are some of the most admired companies. Trust, justice, and ethics. Trust, the willingness to be vulnerable, to be trusted based on positive expectations about the trustee's actions and intentions. Trust equals willing to be vulnerable. Risk, actually becoming vulnerable. Justice, the perceived fairness of authority's decision making. Ethics, the degree to which the behaviors of an authority are in accordance with generally accepted norms, moral norms. So when you look at this is a combination of things. It's not just, well, they just have a good reputation. No, they have these things working for them. That's why they have a good reputation. Why are some authorities more trusted than others? Trust is rooted in three different kinds of factors: disposition-based, cognition-based, and affect-based. And we'll talk about those in just a few. Factors that influence the trust. When you look at that, you see the disposition-based trust, cognition, and affect-based. You see how they factor in. You see from the red, green, and blue. When you bring those together, you see that they all are needed for actually to get to trust. So disposition-based trust, trust propensity, a general expectation that words, promises, and statements of individual and group can be relied upon, which is more damaging in organizational life, being too trusting or being too suspicious. So realistically, when this organization says something, or they put something in writing, or they make a public statement or put something out on social media, is something that can be believed. Their words, their promises, and statements on individuals, groups can be relied upon. They have a history of being trustworthy. And therefore, when you see statements that they make, you are disposition based to trust it. Now, here's a question. Which is more damaging in an organization? Being too trusting or being too suspicious? I'm here to tell you that either one of those, if you are extreme, both of them can be bad or catastrophic. You have to have a balance, trusting to a certain degree, but also being suspicious to a certain degree. But neither one of them to the point of being paranoid. And here's a trust propensity. When you look at this chart, it rates from 1 to 5, strongly disagree to strongly agree. You can go through and rate it. As you see, the average score is 21. Cognition-based trust. Trustworthiness, the characteristics or attributes of a trustee that inspire trust. Ability, benevolence, and integrity. We'll talk a little bit about that here. Affect-based trust. Trust rooted in emotion rather than reason. Based on an emotion bond with the trustee, acts as a supplement to other types of trust. Plain and simple. It means that you like somebody. You're giving them some trust because there's something about them that you like. May not be with other people, but it's something about this company or this individual or this manager or group of people that you like. Therefore, you're willing to actually allow your trust to be rooted in emotion and not the other things. Types of trust over time. So when we look at the disposition-based trust, cognition-based trust, affect trust-based trust. So, so you see new relations a lot of times are going to be in the disposition trust-based. When they advance, most relationships are going to be in the cognition trust-based. And then you have the affect-based trust, where you're going to have another group of people where it's going to fall in that one. Few relationships get there because that one right there, again, is based on emotions. It's driven because you have some likes for somebody or care about somebody more so a company than you do others. And I'll be honest with you, that's the one that can get you in trouble. Justice. Trustworthiness can sometimes be difficult to judge, especially early in work relationships. Justice, relevant acts can serve as behavioral evidence of trustworthiness. And we've got a couple examples: distributive, procedural, interpersonal, and informal. And we're going to talk about those in the next couple of slides. But when you're talking about this, justice, trustworthiness can be difficult to judge, especially early in work relationships. So look at the distributive and procedural. Distributive justice rules. Equity versus quality, equality. Equity versus quality versus need. Description are rewards allocated according to proper norm. Procedural justice rules. You look at your voice, correctability, consistency, bias suppression, representative, and accuracy. And you see the descriptions for each one of those. Distributive justice reflects perceived fairness of decision-making outcomes, gauged by perceived fairness of outcomes such as pay, promotions, assignments. Equity, typically the norm. What that is, more inputs typically lead to more outcomes. So when you look at fairness, you're thinking in terms of, hey, if you have 5 people and they're all doing the same job and started about the same time, realistically, they're all receiving about the same amount of pay. The type of assignments that they're getting, things along those lines. That's fairness. Nobody is being perceived as getting something that's unfair and undue versus others. Equity, typically look at the norm. This is when you look at the outcomes. Like what's fair when it comes to the equity, when you look at the outcome of what somebody's actually doing. Procedural justice here again. You can look at the chart. 1, strongly you disagree. 5, strongly agree. 27, as you look at 27 above, is your average. Combined effects of distributive and procedural justice. So when we look at this, you see high distributive justice, low distributive justice. Interpersonal, informal justice. Interpersonal justice rules: respect, propriety. In the description, do authorities treat everybody with sincerity? Do authorities refrain from improper remarks? Informal justice rules, informational justice rules, justification, truthfulness. Do authorities explain procedure thoroughly? Are those explanations honest? We're going to skip this. This is not a good map chart. Ethics. Some studies of the business ethics focus on 2 threads: prescriptive and descriptive. Others focus on the following: unethical behavior. Especially ethical behavior includes whistleblowing, merely ethical behavior. This is an exercise we're going to skip. The 4-component model of ethical decision making. So when we see the individual factors, good versus bad apples, we see moral awareness, moral judgment, moral intent, ethical behavior, situational. So when we think in terms of moral awareness, we see the chart right here for it, same as the others. But the dimensions, when we look into it, potential for harm, the dimensions. So specific effect, the magnitude of consequences, how much harm would be done to other people, probability effect, temporal, immediately, concentration of effect, and general dimension. You see social pressure, social consensus, proximity, and you see the description for each one of those. Moral judgment, the process people use to determine whether a particular course of action is ethical or unethical. Stages of cognitive moral development. We have a couple different ones. Yeah. Pre-conventional stage focuses on consequences of actions of the individual. So we're not really talking about the company now. We're talking about what an individual may do. And the consequences of actions of that. Conventional stage refers to the expectation of one's family and society. You know, what do you expect the organization to do for you and your family? What you expect it to do for society? How does it give it back? How is it helping in the community? Principal stage, the most advanced, uses a set of defined, established moral principles that a lot of times you'll find organizations that are particularly good ones. These are things that they come up with. It's almost like a company motto, a creed that they live by, and they expect not only to operate as a company that way, they expect their employees to operate that way too. So we see the moral principles used in the principal stage here. And I won't go through all of those. You can pause this and read through those accordingly because they're self-explanatory. Moral intent. Moral intent reflects an authority's degree of commitment to the moral course of action. Can companies benefit from having better moral awareness and moral judgment, even if the costs rise as a result? So you look at moral intent reflects the company's authority degree of commitment to the moral course of action. So what is it? You know, are they trying to do the right thing? What is their intent morally? Are they trying to go about doing the right thing? Listen, you can't get a good moral course of action if you don't have a good moral intent. If they didn't start with a good moral intent, they won't end up with a good moral course of action. So their intent is what they want to do. Their course of action is what they actually did. And that's what you look at it and you say, and those have to be consistent. You won't have one without the other. Now, I should say a good one anyway. You can have moral intent, but it can be bad. And realistically, the moral course of action could also be bad. Can companies benefit from having better moral awareness and moral judgment, even if the costs rise as a result? Absolutely. Because you got to look at the big picture, long term. We've heard this probably many times. A happy employee is a productive employee. And you have to look at, engage your things, say, you know what are the things that we're willing to do to take, I'm willing to take a step backwards to take 2 steps forward. You know, having that good reputation, having less turnover. People don't quit and leave because you do have a good moral sound awareness as a company. So you're not constantly hiring people. You're not constantly losing people. You don't have disgruntled people. And when you have those things right there, here's something else. You get a higher percentage of people who are stars, are high potentials, wanting to come to your organization as a result. Now, 21 Bridges is a movie. The star of that movie was the late Chadwick Boseman, who also was the lead player in the movie The Black Panther. He was a New York detective, and you had some individuals who had gone into New York to steal some cocaine. And during the course of that theft, they actually killed several police officers. And the FBI, the NYPD, and the district attorney's office all responded to the scene, and they were trying to figure out what to do. Initially, you had people who were actually going back and forth and not agreeing. They were kind of arguing kind of over who was going to take the lead and what they were going to do. Eventually, they decided that they would allow the NYPD and this detective that Chadwick Boseman plays to take the lead because of his background. And one of the things that he proposed was these people who stole this large amount of cocaine, one of the things they have to do is they have to sell it. And in order to sell this stuff, they will need to come out of Manhattan to do it. So he proposed, why don't we shut down all 21 bridges to Manhattan so that these criminals can't get out? Let's corner the rats, and then we can catch them in our trap. And initially when it was put out, folks were not for it because they're like, well, it's going to affect commerce. It's going to get people upset. The public, won't be able to go in and out of the city. A lot of other things they talked about. But eventually they decided that was going to be the best course of action to take down these very violent cop killers and robbers. And so ultimately that's what they decided to do, to go with him. But in order for them to do that, they had to trust him. They had to put their faith in him. And he earned that. And basically, with his reputation, it was something that he kind of earned their trust and faith in order for them to believe in him to do that. And it's kind of like with companies and organizations when it comes to how important is trust. Well, if it wasn't for trust, that detective would not have been able would not have actually received the lead on that and been able to make the call, and people believed that what he said would work. How important is trust? Trust is a significant predictor of an employee's ability to focus. Trust also influences citizenship behavior and counterproductive behavior. Economic exchange relationships lack trust and are narrowly defined. Quid pro quo obligations. Quid pro quo is this: you do something for me, I'll do something for you. Now, a lot of times that's usually something not good when you hear that. And you hear somebody, a quid pro quo, I'll do something for you, but you'll do something for me. And a lot of times I may do something for you and I may ask you to do something for me, and it may not be legal, or it may not be above board, or not be consistent with the policy. Social exchange relationships have increased trust and also characterized by mutual investment going above and beyond expectations. So when you see the situation where you have more social interaction with people, and as a result, people get a chance to know each other or have connections and communications, realistically, you have increased trust because you have increased interaction. And by doing that, you now have a better sense of who you're dealing with, what they can and what they will do. And they also can have that about you. So why are some authorities more trusted than others? Let's look at this. When you look at this, you see justice at the top, you see ethics at the bottom, and you see trustworthiness. You see trust propensity and feelings towards trustee. And you see how the arrows go. The reason some authorities have more trust than others is some of them don't possess some of these areas that you see here. And I'm going to say starting in the green primarily, where you're talking about ethical behavior, moral intent, moral judgment, moral awareness, informational justice, interpersonal justice, procedural justice, and distributive justice. A lot of times those will have holes and gaps in there with some of these other people that you may be dealing with, and this is why they're not trusted. Now, reality is this: they're not aware of that, but I am telling you that is what the problem. And without that, as I said, you can't start from a place of negativity and end up in a place of positivity, or from a place that has deficits when it comes to these things and think you're going to end up at trust. You may end up at trust, but it might be partial trust. And there's a high probability you'll end up with no trust at all if there's enough of those areas that are missing. So the effects of trust on performance. When we look at effects of trust on performance and commitment. So look at trust in job performance. We see it represents a moderate correlation. When we look at trust in organizational commitment, we looked at this chart before, it represents a strong correlation. So when people have trust, they have a strong commitment to the organization. And that's the big picture deal. You can have a strong commitment to the organization, but have a media trust level with a particular job performance, because trust has a moderate positive effect on performance. Employees who are willing to be vulnerable to authorities tend to have higher levels of task performance. They also are more likely to engage in citizenship behavior and less likely to engage in counterproductive behavior. So as you can see, both are positive. One is just a little bit stronger than the other. So when we look at the applications of social responsibilities from a corporate perspective, one of the things that people look at social responsibility, the legal component. Are they doing things that are actually legal? Do they follow the law? Do they do things in accordance with the law? And when you say the law, now understand, if you're talking about big corporation, you're talking about not only just federal law in the United States, you're talking about international law in other countries where they do business. Are they doing things in a legal manner? Ethical component is, are they doing things that are in tune with the morals of the society? You can be legal and not be ethical. Are you doing things that are ethical and that's consistent with the morals and values of the place where you are, the country, the city, the place where you are with your employees? And if there is an ethical dilemma, that's going to be an issue. Because now that's going to be one of the situations where it's affecting how people view the organization from the standpoint personally, how it affects me or how it affects other people. Social component is connected to the community. How is the organization, at the end of the day, the organization is part of the community. Is it connected to it? Does it have ties? I'll give you one of the things you look at. You see a lot of times now with large organizations, they allow their people to take time off with pay to go and do volunteer work. That's community connections, social involvement, being a good partner to the community, being a good partner with your employees. So it's a win-win. Your employees get to do volunteer work. They get to help organizations within the community. So that's the social component. So when you see these corporate social responsibilities, you see they have multiple levels right there. That concludes chapter 7.